Walmart has some great information on their 2020 guidance. I will take a look at them on today's episode of Buy or Pass. Hey guys, my name's Jose, and this is another episode of Buy or Pass. In this series, I will look at the financial documents of a company and decide if I was looking for another investment, would I buy or would I pass? Before we start, don't forget to subscribe to get info on new episodes and other videos. So let's begin. Today we're going to start off by looking at Walmart's presentation for their Q4 2019 report. We're going to take a look at first the presentation, and then we're going to go to lazyfa.com to view all the financial numbers in an easy visual format. So I already took a look at the presentation, and I highlighted the most important key points, ones I'm taking a look at, and hopefully save you guys time from reading the whole report. Alright, so to begin, we'll start off with 2020 guidance. Let's start off with the net sale growth. They expect about a 3% constant currency growth. So when we look at actual growth, that might be less than 3% because constant currency is always increasing. But they're saying a 3% in constant currency due to positively affected by the acquisition of Flipkart. For those that don't know, Walmart just bought Flipkart for I think $16 billion. Flipkart is the biggest e-commerce online store in India, and Walmart decided to buy them to fight off Amazon. They do say it's going to be negative impact by the consolidation of Walmart in Brazil, so they're definitely taking off Walmart in Brazil. And also they are reducing the sales of tobacco in Sam's Club, which is also going to affect this. Pump sale growth is going to increase about 2.5 to 3% in Walmart US, excluding fuel, and in Sam's Club around 1% excluding fuel, around 3% if you exclude fuel and tobacco. As you can see, tobacco is definitely going to take a big hit by the reduction of tobacco products on Sam's Club. E-commerce net sales, they say, should increase around 35%, and that's definitely great news. They're moving to e-commerce type sales, and that's a huge percentage growth. Walmart International net sales growth increased about 5% in constant currency. Just like I mentioned before, constant currency, obviously it's not constant, it tends to go higher. So the actual 5% might be lower numbers. Earnings per share, a decline by low single-digit percentage compared to 2019. Increased by a low mid-single percentage compared to 2019 when you exclude Flipkart. They're saying because of Flipkart, it might take a few decline in earnings per share. The only other thing here we can see is capital expenditures. They are focusing on remodeling stores, customer initiatives, e-commerce, technology, and supply chain. So they're approximately about to spend $11 billion on that next year. New units, they don't expect to open up many new units. Walmart wants to open about 10 stores in the US, and international to open slightly more than 300 new stores, and primarily in Walmex and China. Walmex is what they call the Walmarts in Mexico and Central America, and then in China. So that's definitely a good, and we'll see how the actual percentage is broken down later on between China and Walmex. So here are just a few things between Walmart. We're going to take a look at both quarterly, since it's their quarterly for, and yearly. So total revenue is up 1.9% for the quarter, or 2.8% for the year. So that's definitely good. Company is making more money. Net sales increase 1.9% for the quarter and 2.9% for the year. Pretty similar to total revenue, which makes sense, right? Their net sales have increased by that much, so their total revenue should also increase by that percentage. Memberships and other income is down 6% by the quarter and 11% by the year. But if we take a look at the numbers, these are dramatically low numbers compared to net sales, right? This is in the 4,000s of millions, where net sales are in the 500,000s of millions. That's definitely a huge number change. So it's not. I just highlighted for you guys to see that there's such a huge difference between the money collected from that form of income. Operating income up 35% over the quarter and 7% up over the year, which again is pretty great. And here we can see constant currency, how constant currency is affected. Operating the same operating income, if you apply constant currency, is up 37.9% for the quarter. So you can see most of the time constant currency has a higher percentage compared to just regular operating income. Next, the other thing we'll take a look at is here we have Walmart. They still have 11.3 billion of $20 billion authorized, which was approved in October 2017 to repurchase shares. So far, they repurchased approximately 80 million shares in 2019, but this company still has so much money to buy shares. So next, we'll take a look at their quarterly financial highlights. Gross profit rate declined 27 basis points. It's not that much, but it's mainly due to mixed effects from growing e-commerce business. They're also planning pricing strategy and increased transportation expense. So that's right, 27 basis points. It's not a lot, or it's not a huge decline. And you can see they're still growing their e-commerce business, which is increased the transportation expense. Again, that's a great thing. Eventually, that transportation expense might lower, giving them a higher gross profit rate. In format growth, they opened only 2 super centers. They closed 1 neighborhood market of Walmart this past quarter, but they did remodel about 90 stores in Q4 and nearly 500 stores in 2019. So that's definitely great, right? They're trying to make these stores a lot better for the customers. As of Q4, they have also more than 2,100 grocery pickup locations, nearly 800 stores with grocery delivery, and more than 700 pickup towers. So they are increasing the grocery delivery, which I'm pretty sure a lot of people are going to start using. And the grocery pickup is great, right? You don't have to wait in line. You can just order everything online and then just go pick it up. So next, we're going to do some merchandise highlights. Everything from grocery increased by mid-single digits, health and wellness increased by low single digits, and general merchandise increased by mid-single digits. So again, it's good to see this company is increasing sales. Net sales quarter to quarter has decreased. We're taking a look at international now. First, we're just taking a look at Walmart US. Now Walmart Internationals. Walmart Internationals has decreased sales by 2.3% over the quarter, but over the year it did increase by 2.9%. Operating income has decreased 9.9% for the quarter and decreased 6.6% by the year. So that is pretty crazy, right? Their net sales have increased, but operating income has decreased. That's not a great thing to see. So Walmart quarterly highlights, right? Positive comp sales growth in 3 of their 4 largest markets. They had growth in Mexico, UK, and Canada. In China, they saw slightly negative this quarter due to slow economics, just like how we saw in every other company reporting this past quarter. They did mention that slow growth in China has them having lower reports in China. The deconsolidation of Brazil was also offset by the inclusion of Flipkart sales for the full quarter. Gross profit rate declined 116 basis points, primarily due to Flipkart. So we can see Flipkart right now is definitely dragging them down a bit. But I mean, they've only had this company for a few quarters. I think maybe 2 quarters. Hopefully they can pick it up there, but that definitely was a big asset for them. Operating income in the quarter declined 9.9% and 2.8% in constant currency. And some of the major effects for the Q4 2019, one of them was definitely that Flipkart during the full quarter this year. So I'm guessing they got it Q3, mid Q3. So this is the first time that Flipkart was as a full quarter. Next, we'll take a look. So here are some key market quarterly results. Walmex, which, like I mentioned, Walmex includes Mexico and Central America, is up 3.8 in sales, 0.1% in traffic, 3.7 in tickets. We can see here net sales up 5.3%, gross profit rate increased, operating income increased. So operating income increased in Mex, China, and that's it. They've had gross profit rate increased in Mexico, Canada. But we can see China had decrease in gross profit rate, increase in operating income. Canada had an increase in gross profit rate, but a decrease in income. And United Kingdom had a decrease in both gross profit rate and operating income. So United Kingdom is definitely holding them down the most. And then here, some of the we just mentioned, right? Net sales increased 5.3% in Walmex. Net sales increased 1% in China. Net sales increased 1.5% in Canada, and net sales increased 2.7% in the UK. So next, we'll take a look at Sam's Club. Sam's Club is a part of Walmart. Here we have comp sales increased 3.3%, but it is negatively affected that tobacco. They're going to start selling less tobacco on this store. E-commerce sales increased 21%. Again, that's pretty good. We're definitely seeing how Walmart is making a change to e-commerce, and this is probably going to be something that helps them out with the Amazon effect. Gross profit rate increased 98 basis points and 85 basis points with and without fuel, respectively. They are getting higher margins on sales of fuel, which benefited gross profit. Again, they keep mentioning the reduction in sales of tobacco. So this is, and they are increasing investment in e-commerce as well. Next, we see operating expenses decreased 355 basis points, and mainly due to club closure, right? They did close about 83 stores this past year. I think around 80 stores they did close. So that had them operating expenses with club disclosure and discontinued real estate project. It was partially offset by the reduction in sales of tobacco. Next, membership income. Membership income increased 2.2%. That's pretty impressive, right? So even though they declined their stores, they closed down about 80 stores, their membership income still increased. And trends in membership improve as they're giving them more incentives to join. And they did increase the amount of items of value proposition from their higher tiers. Inventory declined 5.6%. And in my opinion, that's great to see inventory decline. That means inventory is being sold at a quick rate. Let's take a look if we have anything else in this portfolio, in this presentation. So no, there's nothing else in this presentation that I highlighted that I thought were key points. Alright guys, so that's it for part 1 of Walmart. The part 2 will be tomorrow, where I'll take a look at the lazyfa.com so we can look at the numbers to see how they're going. Right now, Walmart does seem to look good. They are pretty healthy. They have increased total revenue as a whole, and they are increasing their e-commerce investment. They purchased a Flipkart. Some might see it as a bad thing. Others might see it as a good thing. In my mind, it's just great to have a greater assets that are able to fight the Amazon giant right now. Like I mentioned, next time, tomorrow, we'll be looking at the actual numbers due to lazyfa.com. So don't forget to subscribe to make sure you get updates on that episode tomorrow. So see you next time.